With us here on BTTV, I'm Abhabakaya. Markets this afternoon a little volatile. Let's take a look at where the indices stand. Down just about 0.5% or so. Overall market cap has definitely come down a bit, even though advanced decline ratio is not looking too bad. 18,328 on the Nifty, Sensex at 61,634. That's where we're at right now. We are down for about a week despite the move on Friday. And today, of course, also in the red. The Sensex also done about 0.2-0.3% there. The Bank Nifty, FMCG, some of the pockets there that are looking a little weaker. We've got Nestle that's a little weak, Dr. Reddy's. Pull up some of the other losers for you also on your screens. We've got Bharat Force that's in the news on the back of those earnings miss, and that's not really, getting any kind of a reaction from the market. Pretty much some selling pressure coming in on that front. So there you have it. From the FMCG names, Nestle, HUL. Then we've got other losers like a Power Grid, for instance, that are also trending lower right now. So definitely action is a bit skewed towards looking weaker for the moment. Let me also welcome in Rajat Sharma joining us on the show today. Rajat, always great to have you with us. What are you making of the mood of the market right now? Because on one hand, our own domestic strength seems to be intact, but on the other hand, those global concerns, the Fed's constant hikes, we're now seeing the pinch. We're hearing, of course, murmurs of the U.S. economy, feeling the brunt of it. How soon is that going to impact us?
I have to say, your voice is not very clear, but I think most of the stocks that you just named in the FMCG space, I like a lot of these stocks, and this is where we're looking to invest a lot. The reason is, again, as you said, the Fed interest rates are going up, and I think if interest rates keep going up, companies that have no debt on their balance sheets will probably do well. And FMCG and pharma in particular are two spaces which I like a lot because if interest rates keep going up, if the inflation can be controlled, these are the companies which will see the most benefit on their margins and stocks like HUL, ITC, Bajaj Auto. A lot of these consumption-oriented stocks where they don't have any debt on their balance sheets, and what they're suffering from is uh, a lot of squeeze because high inflation, high raw material prices, because of which their margins are getting squeezed. And I think if inflation can be controlled, which is what the banks around the world are trying to do, I think these are the companies that will do very good. So that's where we added a lot of stocks.
Okay. Rajat, I hope you can hear me more clearly now. Wanted to understand from you also in terms of that portfolio churn. You mentioned FMCG. Are you going to be focusing more on the defensives now in the current environment? How would you be readjusting your portfolio?
Yeah, I don't necessarily look at a lot of these stocks as defensive. The ones I'm talking about, whether it's in pharma or in FMCG, look at a stock like ITC, and I've been, you know, I've had ITC in my portfolio for the longest time. The stock did not do well for a very long time now. All four businesses for ITC are firing all cylinders. So I think a lot of these stocks are not really defensive. They're very aggressive bets. And yes, we've moved a lot of money in FMCG and pharma stocks like ITC, Bajaj Auto, HUL, Britannia. Britannia at a 52-week high has still got a dividend yield of about 4%. So I like a lot of these stocks where the companies don't have debt on their books. So that's where we are looking to buy a lot more.
All right, understood. What would be a clear avoid, Rajat, at a time like this?
Financial services. Financial services, I think, because if interest rates keep going up, this is one sector which will struggle a lot. Also, because in the last 2-3 years, this is like I'm talking about a cycle. In the last 2-3 years, nobody really knows where all the NPAs and what all the problems for a lot of these financial companies went. And I'm not talking about banks only. I'm talking about consumer finance companies. I'm talking about the likes of Bajaj Finance and a lot of these gold loan companies. I think that's where you're likely to see a lot of pain. Look, my idea is if you can make about 10-12% in other sectors, why go to financials? Because there will be increasing NPAs in this sector as we go forward.
Interesting. Hey, Rajat, that's a little different to what we've been hearing or the traction we've been seeing, especially even in the PSU banking names. Earnings have been so good this time around. I know you're predicting a scenario that's likely to happen, but just to play devil's advocate, is that also contrary to the fact that people are expecting financials to benefit on the back of the economic growth story domestically?
No, I keep hearing that, and I look at
Yeah.
these balance sheets of a lot of these banking companies really closely. So one bank that I liked a lot was Bank of Maharashtra because within the PSU banking space, this is one bank which has the lowest NPAs, the highest profitability that they reported last quarter and the quarter before that. But I still doubt the ability of these banks to overtake the likes of small private sector banks. So I think Federal Bank and IDFC would still probably keep eating into the market share of these public sector banks. And uh, I was on one of the shows a few days back, and I recommended Bank of Maharashtra as my top pick in PSU banking space. The stock has run up a lot since then. Having said that, I didn't really buy it because I have a clear bias towards private sector banks, and I'd like to avoid the PSU banking space completely.
All right. Meredith, just a frank question. Do you think the Fed has overshot? With all the noise and a debate around, the kind of quantum they should have hiked, they seem to have been a little deaf to it. Do you think they've overshot? Do you think this is going to have repercussions that we're not fully factoring in yet?
Well, so far, if you look at it, whatever the Fed has tried to do, they failed at doing that. Inflation in the US is still at, the last time we had inflation like that was 1982. I mean, I was 2 years old that time, so I really don't know how the markets were back then. But they've raised the interest rates really aggressively from 0% to 4%, but not really seen any impact of that on inflation getting controlled. The hope is at some point it will get controlled, but as a central banker, the only monetary policy tool you have is to raise interest rates. So uh, let's see how things play out. But given that they've raised the interest rates so aggressively, and despite that, markets in the US have started doing well again. Look at how Nasdaq has performed in the last 2 weeks or 3 weeks. Uh, have they overshot? Really? I mean, I'm not an economist to say that, but remains to be seen in the next couple of quarters.
All right. So let's also take a break and go across to Kanksha on Infosys. It's the latest IT major to ask its employees to return to office for work. Now, according to internal communication assessed by us, the IT bellwether is adopting a three-phase work from office plan. TCS, India's largest IT services company and one of Infosys' competitors, has already started a hybrid model to bring back employees in offices in a phased approach. We've got Akanksha Chaturvedi with us for more details. Akanksha.
So yes, Abha, Infosys is going to resume work from office for its employees in a phased manner. The company's employs a little over 3 lakh people, and these people would have to start working from office in as per a three-phased plan. So the first phase would be all employees would have to work and report from office for 2 days every week. And the next phase in this plan would be that employees can get to choose or relocate to any branch or any location of their choice. Interestingly, Infosys has actually 247 locations which are spread across 54 countries. So the logistics of this plan are going to be very interesting. The other part is the final or the third phase of the plan would actually be determined on the basis of the first two phases, and that's how Infosys is going to work on its hybrid work policy. But moving ahead, the company's HR head, Krishnamurthy Shankar, as well as Salil Parekh, who's the CEO of the company, they've said this many times that they want employee flexibility at the core of all what happens, and they don't want to inconvenience their employees. And it's usually been noticed that employees usually prefer to work from home, and working from home has the comforts of working from home. They don't have to waste time or energy on commute. But the fact is, Infosys's policy is extremely flexible. So it gives employees that breathing room. And like you mentioned, even TCS has a work from office policy, which is a 25-25-25 policy, which was, put in place after the COVID-19 pandemic. And all employees were asked to work 25% of their time from office. And at a time, there were 25% employees that are working in office. So that's 25 for employees as well as for 25 for the office. So yeah, back to you, Abha.
Thanks for that, Akanksha. Rajat, what's your view lately on some of these IT majors? There have been some, concerns with regards to impact again on global operations, and domestically we've been seeing huge debates around moonlighting and such. So with increased efficiency, how are they featuring on your radar?
No, so Ava, I've really liked IT space for the longest time. One stock that I really like at this point is Wipro because, it's fallen from 720 to about 395, 396. So it's available really cheap. As for Infosys, it's one of my favorite stocks. It still remains one of my largest holdings. This company has zero long-term borrowings, zero short-term borrowings. They've got reserves of 66,000 crores. So the thing with IT companies is that, if there is a slowdown overall in all the other sectors, their order flow suffers. So these are companies which don't really get impacted directly by interest rate hikes that we were talking about. But if interest rates go up, if there's a squeeze on liquidity, if other companies don't have that much money to spend, then their orders suffer. So to that extent, these companies will struggle if there's an overall slowdown, and they struggle a lot for no fault of their own. But having said that, I think Infosys has nothing that I can point out about what should drag the stock down. So I think if you were like a newbie in the market, if you were still trying to make a portfolio, getting started with investing in stocks, this is definitely one of the stocks that you would add to your core portfolio. I like Infosys a lot, and it's my favorite long-term bet.
What about HCL Tech? I just wonder because there have been so many buy calls coming in an HCL Tech. So at the current price point, do you feel perhaps there's a little bit more room on the upside on that one?
No, I don't think so. I think the stocks that will do well are either the front runners, TCS and Infosys. And, as I said, when I was looking at, the numbers of all these companies, Wipro, I thought, has fallen a lot for reasons which I couldn't understand. So that's the only other stock that within the IT space I like at this point.
All right, great. LIC in the news today, Rajat. This is post earnings, of course. We've seen a phenomenal jump. Standalone after tax profit up 10 times year on year at this point of time. And pretty good numbers coming in. Revenues up close to 20%. Solvency ratio was up about 100 to 188% from 183%. Way above the minimum requirement as well. I mean, lots of other, stats that one could go through. But clearly, it's made some change to its distribution policy, and perhaps that's also led to the jump. But would you be interested in an LIC? Yes, no, maybe?
No, I don't think I would be because, ever since the company got listed, since its IPO, I've said that it is a really overcrowded space. And the problem is a lot of these companies in insurance space, when they come to the market, their businesses are already so mature. And you have today companies like HDFC and ICICI, the insurance companies, which offer a lot more products because we have a distribution arm ourselves at Sana Securities, and we see a lot of clients coming in and calling us, coming in, talking to us about products of HDFC and ICICI. They have a lot more innovative products. LIC is, the yields, the IRRs are not good enough. So how can it be that clients don't like the stock, but investors or shareholders should like it? I don't see them challenging the likes of the private sector peers at all.
Sure. All right. Let's see what else is buzzing in trade today. I think we've got Tanya with us also on some of those stocks that are buzzing in the broader markets, and we'll go across to her. Tanya?
Well, absolutely, Abha. Firstly, shares of Hindalco Industries were up over 6% in today's trading session after the company reported its earning for the quarter ended September 2022. Now, it is important to know that the company posted a 36% drop in its net profit. However, Brokerages are looking positive as they believe that the near-term cost of production would start reducing on better coal availability. And the management also said that the worst is behind and they expect cost pressures to ease going forward. Then, of course, the IRCTC shares, they were also trading higher ahead of its Q2 earnings. Now we are expecting the profit to be up by almost 55% for the September quarter, and revenue for the quarter is also likely to surge by over 100% on a YY basis. We could see a drop in margins due to the falling contribution of high margin ticketing business. So then, of course, as you were pointing out, LIC shares were also up by over 9% today, after the insurer reported a multi-fold jump in its September quarter profit because of course, the changes in its accounting policy. It reported a net profit of 15,952 crore rupees for the September quarter, compared with 1,433 crore rupees in the same period last year. Now, ICICI Securities has also initiated its coverage on the stock and has a buy rating with a target price of 917 rupees. Now, they are suggesting an upside of over 38% in the near term. Back to you.
All right, thanks for that. Hindalco, the other one on earnings. Rajat, let me get your view also just on the commodity pocket overall, given the current pressure, in the global context.
Sorry, I didn't get the question.
Hindalco, we were looking at Hindalco earnings and they've taken a bit of a knock. So I was asking you your take on Hindalco, but also on the commodity basket, given that of late we've seen a fair amount of pressure coming in on the back of global prices.
Sure. So two things. Hindalco as a company, I don't like because I find their management a little substandard. And I've said this a few times before. I don't ever invest in companies where I think the management is not good enough. And as for commodities, I think the only company that I've liked in metals ever is Steel Authority of India. I know it's a government sector company, which is a little against my own investment philosophy, but I think that company has the lowest levels of debt, and I think they will benefit a lot from government projects. Having said that, metals is not one of the spaces where I'm looking to deploy any capital at all right now. So perhaps the wrong question to me.
No, I know you're bearish on metals, Rajat, but just to reiterate that stance as well and get a cue from you on why that segment is not looking so attractive. I mean, it's just a matter of a few months. This year has been so topsy-turvy, and pockets that were looking really good at the start of the year are just now have a big question mark around them at this point of time. From the broader markets also, Rajat, anything in the mid-cap space, small cap space, anywhere that you're seeing tremendous opportunity or value at current levels?
In the mid-cap and small-cap space, not really mid-caps and small-caps, but I really like power sector in particular with everything that's going on in the EV space. And but a lot of these stocks that I like, stocks like SJVN and NHPC, they've run up a lot since the time I recommended it. And the good person that you are, you asked me this question a few years ago, and that time I think I recommended SJVN and NHPC and the same stocks, and they've run up from about 24, 25 rupees to about 36, 37 now. And even now, these stocks offer a dividend yield of about 2%. SJVN has a dividend yield of about 3.6, 3.7%. So I would recommend adding these stocks even now because power as a sector, I really like going forward if you had like a 5-7 year view on the Indian market. So this is definitely where I would still recommend adding. But as a disclosure, we've added a lot of these stocks at much, much lower levels, which was not very long.
Fantastic. Yes, I do remember, Rajat, and great to get a sense of what you're tracking right now. Thanks so much for joining us on the show today and taking us through some of your latest picks. So clearly, a strong view coming in from Sana Securities on, looking at not financials, surprisingly, but actually looking at FMCG names, for instance. And we all know some of them have seen phenomenal returns of late, Britannia, ITC, to name a few, and continuing to be bullish on that pack, as well as some of the frontline stocks in IT, like in Infosys, TCS, Wipro. Those were clearly on Rajat's list. However, from the financials, he does like a Bank of Maharashtra And that was one that's actually cropped up on quite a few of our analysts' radar. So clearly, that bank is looking good when it comes to numbers and the balance sheet and how they're delivering. But otherwise, in trade today, let's take a look. Looking a little weak and a cool off on those FMCG names that Rajat was talking about. Overall, advanced decline ratio as well towards towards the weaker side in today's session. No major cuts, like so to speak, but nonetheless a quiet day in trade. And it was really the volatility through the session, I guess, that kept everyone on their toes a little bit. If we take a look at some of the major stocks, I think Reliance was down a bit, ICICI Bank, SBI. ITC cooled off in today's session, L&T. Titan also seeing a bit of a cool off coming in, Nestle as well, Power Grid and Dr. Reddy's. So some amount of a cool off on the names that have been running up, but also something like a Dr. Reddy's was down about 3 to 4% in today's session. Other than that, on the gainer side, we'll pull up some of the index gainers for you, but I'm also looking at the broader markets, and there we did see plenty of spots of green, a Fortis Health, a Manappuram, Cochin Shipyard, Indiabulls Real Estate, Hindalco post earnings we were just discussing was up about 5%. GE Shipping is up 5% as well. Cargo Logistics, Hindustan Zinc, plenty of names that we continue to see traction in. Ambuja Cement, Glenmark Pharma, Balrampur Chini, Sri Renuka Sugar. So sugar as a theme, real estate as a theme. Oberoi Realty was also up, for example, some of those healthcare names. Cement, so cement, real estate, healthcare, continuing to see those themes playing out really in trade. That's it from us this afternoon. We've got the Sensex down about 200 odd points. We've got the Nifty closing at about 18,316. Like I said, no major cuts, but we'll have to wait and see how the week progresses from here on. Last Friday, of course, we got a nice bump up at the end of the week. And, that helped to kind of smoothen things over a little bit. For the month, of course, we're still looking pretty good on the exchange. Let's see if that story continues to ride through. Thanks so much for watching.